All right. Thanks, all. Appreciate it. Thanks for tuning in. Yep. So, a lot's been going on in the market. And I got to say, we are not surprised because once Microsoft failed, and we talked about this over the past week, that as long as Microsoft hang out, or I should say, hung out above this important price level here, the market would be okay, right? Go sideways or go up. But what happened? The support broke, and the S&P's fallen apart since then. So this is what we were watching, and it made sense. Sometimes markets are like that. Sometimes there's only one or two things to watch. They're simple, right? As far as it goes. Sometimes you don't know what the hell to watch. But when you get a major stock like Microsoft, one of the three biggest companies in the S&P 500, testing support, it's worth watching because if that support breaks, that's going to put downside pressure on the entire market. Another quick thing before we go into what I had advertised was in video. Really bad action here. And look at that in the pre-market. There's only a teeny bit of a rebound. So good numbers. Stock opened at the highs of the day, closed at the lows of the day. This is what we call bad action. It's something you just kind of really can't quantify. All right, so let's talk about a little technical analysis lesson here. And what I want to show you is that securities can be very different, but yet you see the same patterns. And why is that? It's because when you look at a chart, if you do it the right way, the way I try to teach you to do it, you're looking at the psychology of the people that are doing the trading. And whether you trade Bitcoin or currency or the S&P, you experience the same emotions, and that's what shows up on a chart. So here we have resistance at a level that was resistance, right? This is our old buyer's remorse. People buy at the top. When the price goes lower, they're like, oh, if it ever gets back to my price, I'm going to sell if I can get out of break even. And remorseful buyers placing sell orders at levels that were resistance can turn what was resistance into resistance again. Now down here, you can see that, and think about how big this market is, right? It's almost unfathomable. Hey, I got it out. Usually when I try to say that word, I mess it up. But here is resistance becoming support. This is your seller's remorse. People sell and they thought this was an easy thing to do, but then the price goes higher and they're like, if it ever gets back to my level, I'm going to buy my shares back at the same price I sold them at. And you can see the same kind of phenomena down there. Now, let's go take a look at Bitcoin, which is very different. And what do we see? Some of the same things here. Resistance at the level that was resistance. You get support at levels that were support. But if you didn't see that this was Bitcoin and you didn't see the price scale, you wouldn't even know what the hell this is. But look at that. Levels that were resistance becoming resistance. Now, this is very different security than we were just looking at, but the people that do the trading have the same emotions. Let's look at, I don't know. What the hell? How about the euro dollar? Let's see here, Forex. And let's bring this up to present. All right, so look at this. Now we're looking at currencies. And what do we see? Look at this, right? Resistance at the level that had been resistance before. So this is a currency. Support at a level that had been support before. Resistance at a level that had been resistance before. Right? Now, this is very different than what we were looking at in terms of what kind of a security it is, but we see the same things because the people that are doing the trading have the same emotions, and that's what shows up on charts. Look at oil, real clear support. All right, now before I go, I just want to show you something I think is really cool. Here's the Dow Jones. This is probably like my all-time favorite chart. Going back to when the Dow Jones started all the way back in the 1890s. And look at back then. You can see the same things we see now. Resistance at a level that was resistance, support that at a level that was support. And it's because, like I said, things have changed a lot since back then, 130 years ago. But what hasn't is human psychology. And this is what we see on charts. Just like back then, just like now, People experience buyer's remorse if they buy at the top and seller's remorse if they sell at the bottom. People back then felt the same way. And this is what we see on charts. All right, everybody. I hope this helps. Thanks for tuning in, and I will see you all soon.